Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, stable for the markets. Let's get talking about specific stocks then. Let's find out what's happening with Biocon and what analysts are making of the positive commentary, especially for the biosimilars and biologics segment. We have Vishal Manchanda joining in to discuss that. And before we get to Vishal, there's some news coming in on Zenza. They've acquired a US-based digital agency, Indigo Slate. So we'll try and pull up the press release to get you more details of that. So the stock is just about trading with a little bit of a positive buy. So that's news coming in on Zenza acquiring a digital agency, Indigo Slate. Any more details?
No, I mean, they actually made another acquisition a couple of months back, and Zenza itself made an acquisition. That acquisition was worth about $30 million or so. So we don't know if this is bigger than that, but I think we'll have details in just a bit. The company that they've acquired, I think, does revenues of about $20 million or so. So that is something which we can put out at this stage, but beyond that, not very much. At this point in time. So second acquisition, I think this year, 2018, coming in from Zenza. That's the one I'm talking about, $20 million.
So not much in terms of a big size of an acquisition coming in for Zenza. $20 million is what they did in terms of total sales for Indigo Slate in 2018. But nonetheless, talking about Biocon now, the stock is up around 9% at this point. Vishal, tell us, are you changing your estimates post that conference call that took place, and what exactly is your target price as well as your call on Biocon?
Like we have a sell on Biocon, and we are not actually changing our estimates. Although the launch of pegfilgrastim biosimilar is ahead of our anticipation, but it's just a quarter ahead of our expectation. So we had anticipated the launch around October or November, and it's about 3 months ahead of that.
So go ahead.
So, yeah, so it's actually materially, it's not going to make much of a difference. It's the most important aspect of biosimilar market being how much acceptance does the biosimilar gain. So how much is it able to substitute is the critical aspect.
What would make you incrementally positive on Biocon from here on? Say if you have to change your sell rating.
So basically, we'll have to. So we have several. So we see several risks around the launch. So basically the risk, when I say one is competitive risk. So we have two other players just waiting around the corner, looking to launch a competitive version. Then we have also two 505(b)(2) versions also lined up. So which should be there on the market next year. And we'll also see other biosimilar versions also creeping in. The other aspect we need to also understand is the commercials of a biosimilar product. So when I say commercials, I mean the return on investment economics. So we know the sales is going to be significant, could be $100, $200 million. But the investments that goes into developing a biosimilar are also disproportionate. So if the clinical trial alone would cost you $100, $150 million. And there is also significant capex that goes into building a manufacturing facility for a biosimilar. So all these needs to be validated before we plunge and take a call on Biocon.
Okay. That's on Biocon, but I wanted to turn your attention to Dr. Reddy's as well. That's the top loser on the Nifty post the conference call takeaways that took place last evening. What do you think was probably the biggest negative which maybe came out, which disappointed the street?
So the Suboxone numbers were baked into the quarterly performance. So the earlier, so everybody was surprised at the number, 460 crores of net profit. But Suboxone numbers being baked in, so there was a bit of so the numbers may not recur is the concern, but my sense is Suboxone would be about 100 crores contribution in the quarter. And so the rest all is recurring.
Okay, quick last question. When was NuvaRing expected to launch now that it's delayed to first half of 2019 as well as Copaxone?
I think NuvaRing, the guidance earlier was also on the same lines, first half of 19. So the company had guided they would receive some queries, and the launch could get delayed to the first quarter or second quarter of calendar year 19 or second quarter. So it is not the timelines are not changing too much.
Okay, Vishal, thanks very much. We'll leave you to it. Appreciate you joining in with those thoughts. Ashwini is with us on the top of 11:30 as always. Ashwini, good morning. 70 points on the Nifty. What would you do?
See, since yesterday, I believe, the leadership of the market is kind of changing, and, corporate lenders and PSU banks, PSU financials in general, they are taking on leadership. And if you see those, 10, 12 haloed group, they are kind of ceding ground. Even within Bank Nifty, some of the retail banks are seeing profit booking. So that way on the Nifty as well as Bank Nifty particularly, you should be getting long on right now, because as the market goes into close and BOB and ICICI Bank, build-up tends to happen. I would think that Bank Nifty will probably see another day of rally. It's in an expansion, and in an expansion, you generally tend to close nearer to the highs of the day. Having said that, Century Textile is a buy with a stop of 930, target of 965. CEAT is a buy with a stop of 1380, target of 1450. And Escorts is a buy with a stop of 900, target of 925.
Okay. Ashwini, if you're expecting some follow-on buying coming in on the Bank Nifty, if you had to take a stock-specific call within the Bank Nifty constituents, which are the stocks that you would recommend on either side?
See, corporate lenders are the best stocks to buy. ICICI Bank, State Bank, even the smaller guys like Axis, BOI, Canara Bank. Because if this is turning, and we'll probably get confirmation today, then there's a large rally ahead. Private retail financials are probably, done in terms of valuation. So money is ready to move the moment it gets the first signs like we saw yesterday. So the market is well positioned to accept good news and react on it on these corporate lenders. So my sense is that if we have to go forward, even in terms of the Nifty rally, we need new leadership, and that's emerging in terms of ITC and these corporate lenders.
Okay, Ashwini, just one quick sort of word on the Nifty break into new high territories. Convincing to continue to trade. Looks like this could build on.
Yes, because now the fresh stocks which are moving, they are under-owned. They were the hated group. If they take on leadership, then you will get large rallies on stocks like ICICI, State Bank, even ITC. So it was very important that those money came out a little bit from those 10, 12 stocks and started to move into other groups. So that way Nifty is probably opened up a couple of 100 points of upside.
Okay, all right. We have a couple of Twitter queries then for you, Ashwini. So let's get that going. Shravya has 100 shares of HUL, Hindustan Unilever, which is bought at 1764. Should I hold or sell? That's the question.
The problem is that he or she has probably caught a top. Now, it's a good stock, no question about that. But, this was used as a safe haven. So it can easily come off another 50, 70 points. So if you have the gumption to add on as it declines, it'll be a decent stock for you. But if you are going to, just have this 100 shares and watch the stock go to 1550, then it'll be a long haul. So my advice would be to keep adding on and to keep lowering your cost. At some point, one day it will go past 2000. That's not the problem. But it may take a while as the market shifts leadership.
71 points on the Nifty, 11,238 is where we are at, and it's looking pretty good. As I said, market breadth is good, and broadly there is not very much to complain about this Friday. There is another big insurance IPO which is actually coming to the market soon. We understand from sources that the insurance regulator, the IRDA, has approved the IPO proposal of PNB MetLife. Yash is now joining in, breaking that story. Yash, morning. What are you picking up?
Well, Prashant, to be precise, the fourth life insurance company expected to get listed on the exchanges by the end of current calendar year itself. And interestingly, the fourth insurance company which has a bank as its parent company as well. What we're given to understand is that the insurance regulator IRDA has given its approval as far as the IPO proposal of PNB MetLife Insurance is concerned. And the company is expected to file its DRHP with market regulator SEBI in the next 14 days, which is about 2 weeks from now, and launch this particular IPO, insurance IPO, by September end is what we are given to understand. Now, as far as the valuation of this particular IPO is concerned, sources tell us that the embedded value of PNB MetLife is somewhere around 2,500 crore, and the company is looking to raise approximately about 10,000 crore, slightly upwards of 10,000 crore from this particular IPO, which would be about 4.5 times price to embedded value. As far as the shareholders who are expecting to dilute their stake in this IPO are concerned, we are given to understand the parent company, bank, Punjab National Bank, is likely to dilute approximately 10% through this particular IPO. Also, other shareholders like Elpro International, Jammu and Kashmir Bank, M. Palunji Group are also expected to dilute stake as far as PNB MetLife IPO is concerned.
Okay. Yash, can you just elaborate a little bit on all of the shareholders within PNB MetLife which might be looking to dilute stake, and some of them are listed as well?
Exactly. Very interestingly, this company, Elpro International, held about over 12% stake till about a month ago. What we're given to understand, it has already diluted about 1.33% stake in PNB MetLife. That stake has been sold to the foreign partner, which is MetLife Insurance, which has essentially also acquired stake from other shareholders, which is an off-market transaction, and taken its total stake to 35% from the previously held 26%. Also, further, Elpro will be looking to dilute its stake when we talk about PNB MetLife Insurance. And what is very interesting about this company is that its market cap, current market cap, is about 900 crore, whereas its 11%, approximately 11% stake in PNB MetLife, that, as per the valuation which we are given to understand, is valued at about 1100 crore. So it's more than its market cap, which makes it a very important and attractive opportunity as far as value unlocking for Elpro International is also concerned.
Yash, you said over 4.5 times embedded value, right?
Exactly.
And did you get to speak with people in the industry? How does this compare to where other life insurers are now at?
So, industry average is somewhere around 5.5 times.
Okay.
The best embedded valuation enjoyed is by HDFC Life, which enjoys about 8.5 times price to embedded value. So that's somewhere where the industry is currently.
So this is actually coming at a lower,
as compared to industry, but that's also to what the business is with PNB MetLife Insurance, of course.
Okay, that is the company that Yash was talking about, which is Elpro International, which owns what, 12% you said, right?
Exactly.
12% in PNB MetLife, and they might be looking to sell, and the value of that 12% stake, I mean, if they were to decide to sell all of it, would be greater than the market capitalization. Of course, before jumping to conclusion, one will have to see whether A, first they do decide to dilute, and C, and B, what they decide to do with the cash if that cash comes into the company. That often determines what happens to the stock once the announcement has been done.
Well, let's get talking in terms of a couple of big earnings to watch out for. I think it's one of the biggest days when it comes to earnings in terms of reactions, as well as stocks which will be coming out with numbers today in this earnings season. Reliance Industries is the big one, and that's going to be post-market. Sonia and Rima are here to give us what the key expectations are. Sonia joins in first to give us an overall 360-degree view on all the aspects of the business. Sonia.
Well, thanks for that. You know, it has been a very strong year for Reliance Industries. It has re-entered the $100 billion market cap club. The stock is up over 20% this year and is at a record high. So the scope for disappointment is limited. In that context, the two verticals that are expected to positively surprise are telecom and retail. The bread and butter businesses, let me just take you through the expectations. The petchem business is expected to do well. It did well last quarter, and that trajectory is expected to continue. That will be offset by the weakness in the refining business. So the gross refining margins for the company are expected to peter off to $10.50 a barrel, versus $11 last quarter. That's because the Singapore gross refining margins have been under pressure at a 7-quarter low, coming in at $6.1 a barrel. That's about the refining business. But on the petchem business, it's expected to be quite strong. The volumes are expected to grow 2.2% on a quarter-on-quarter basis, coming in at 4.5 million tons. This compares to 4.4 million tons last quarter. Now, the reason for that is the ramp-up that we've seen in production from two of their units, ROGC and PX. Because of the strong petchem business being offset by the weak refining business, the overall numbers are expected to be flat on a quarter-on-quarter basis. EBITDA is expected to go up by just 1.8%. Profits are expected to go up by 1.4%. On the telecom vertical, there is an expectation that the profits will be higher than what they did last time around. Last quarter, they saw 510 crores of profits. This quarter expected to be 700 crore plus, and the subscriber base has also risen. Retail business also expected to grow to about 25,000 crores of revenues. Back to you.
Okay, Sonia said Jio, would be also in focus with potentially strong numbers. Rima is standing by with exactly what we're looking out for from Jio. Rima?
Well, first the numbers. So revenues will be higher by 3.5% on a quarter-on-quarter basis. Margins largely stable, maybe a positive buy, so 38.1% according to our poll. And profits too are likely to nudge higher to 567 crore versus 510 crore. Now for Jio, the biggest growth driver is the very strong subscriber addition, which is adding to their incremental revenue. So every month, Jio adds close to about 9 to 10 million subscribers. At least that's been the trend for the last 3 quarters. So if that happens, this quarter we could see about 28-29 million subscribers getting added, and that will provide the revenue driver. What will offset it is the pricing pressure in the industry. So even Jio is not spared from it. For Bharti, we saw a 9.5% decline in the average revenue per user, or ARPU, which in simple terms you could call it as pricing. Even for Jio, we are expecting a 10% drop on a sequential basis in pricing. So the key metrics to track will be the subscriber addition as well as the average revenue per user. Also, the company entered into the postpaid segment in May of this year, and they had entered with a plan of 199 rupees per month. So if there is a lot of offtake in that, it can help offset some of the ARPU pressure. So we will watch for traction on that if they give us any more details, as well as on the Jio phone, because the company is coming up with a lot of offers. There was an exchange offer as well announced at the AGM. So attraction in Jio phone will also help the company on the whole.
Okay, all right, Rima, thanks very much for that. So it's going to be a busy evening when it comes to earnings today. ICICI Bank, Bank of Baroda, and we have Reliance Industries as well, and the disclaimer flashing on your screen. Just want to point out Prism Johnson's numbers. It's been an operational improvement this quarter. The revenue has increased only 13%, but just look at the kind of margin jump they've reported, 12% versus 5%, and a net profit which has come in all the way at 70 crores versus 16 crores. In terms of segments, the cement business has improved in terms of profitability, 142 crores versus 87 crores. The tile segment has reduced its losses on a year-on-year basis to 9 crores versus 22 crores. And the last segment, which is RMC, ready mix concrete,
70 points on the Nifty, so it's actually pretty steady. We started 11 o'clock with about a 72 odd point gain, and we're right there, so there is not much by way of change, and no earnings so far as well. Actually, most of the big numbers are all scheduled to be reported post-close. Devang Mehta is head of equity advisory at Centrum Wealth Management, and he's now joining in to discuss what he makes of things. Devang, thanks very much. Broken through new territory on the Nifty. What do you make of this breakout, and does this bring us another sort of leg of performance, meaningful leg of performance in your view?
Good morning, Prashant. Thanks for having me on the show. I think, yes, clearly this leg up in the last few days, what we have seen, that the markets making lifetime highs, Sensex, Nifty, both of those. It was more or less, if you see just 10-15 days back, it was a highly polarized market with, you can just count the stocks on your fingertips, that only 8 to 10 stocks were participating in this rally. But in the last 3 days, we have seen that a lot of companies have come up with good earnings. I think broad-based participation in terms of the more part of the market breadth also participating augurs quite well, which again shows that Nifty and Sensex, if they want to sort of get a gear up from here, a lot of participation will come in from cement, from capital goods, from companies like ITC, which came up with numbers yesterday. I think consumption was always a good basket, but improvement in results in terms of PSU banks or in terms of even I can say capital goods or infrastructure augurs very well for the overall breadth of the market. So I think yes, there is some strength being visible in the market purely on the fundamental micros, though macros are not so great.
Okay, well, maybe some relief for fertilizer companies. The government's cut the IGST in imported urea to address accumulated tax credit issue. So just keep that on your radar. But Devang, before we run out of time, just wanted your thoughts in terms of what your expectation is from ICICI Bank as well as Bank of Baroda today, especially after Canara Bank's numbers, which has really enthused sentiment.
I think we are clearly near the end of the, I can say, the stress cycle. It's very difficult to figure out whether it will sort of, the NPAs would bottom out this quarter or in the next couple of quarters. But I think clearly there has been a good beginning to a lot of the NCLT cases and all, which a lot of PSU banks and a bank like ICICI Bank are sort of in a problem. So maybe I think there will be a distinct visibility in terms of numbers improving, or at least the management commentary, which is very important in terms of all such banks, that what is the future forecast in the next couple of maybe quarters. But private banks is one space which is clearly still commanding that premium, and PSUs you should sort of start nibbling into in a couple of large cap ones, but otherwise it's more or less still on the avoid list.
Okay. What else? Where else are you seeing interest? When actually, where else are you interested, Devang? What kind of names? What kind of sectors, etc.?
I think we are more on the NBFC trade side, where we are seeing good bit of traction, not only from the consumer NBFCs, but a lot of punished stocks in terms of your NBFCs in the housing finance space and the vehicle finance space have also not shown a bit of recovery in the entire up move that the market has been seeing. I think this is one space which can probably get re-rated over the given period, and capital goods and cement is one interesting space for the next couple of years, where government capex is already started, and being an election year, there will be good government spending on roads, highways, etc. I think private capex, if at all it comes in the next 6 months or 1 year, it will be icing on the cake.